If you're not using tax planning strategies in your profitable business, I can guarantee you right now you are overpaying tens, if not hundreds of thousands of dollars in taxes in your business. Now, in this video, I'm going to talk about the 5 tax planning strategies that saved our clients last year over $40,000 on average per each client. So what if you could take that $40,000 and put it in your pocket? And that is exactly what we're going to talk about in this video. Ready? Let's go. Hey, welcome to my whiteboard tax strategy. My name is Boris Musheyev. I'm a CPA and a certified tax strategist. Every Tuesday, I release a tax strategy video here on YouTube for you, the business owner. By watching this video, my goal is for you to start paying less in taxes right away. So go ahead, subscribe to my channel, like it, share it, and even comment below. I appreciate you. Now let's get started. All right, awesome. Let's get started. So I broke this video down for you in 3 simple steps, right? First of all, we're going to talk about what is really tax planning and are you really getting it as a business owner? Then we're going to talk about the 5 tax planning strategies, all right, that equal $40,735 in tax savings. This number is an average number our clients saved using these exact tax strategies. And in this video, I'm just going to share everything with you. And last but not least, how can we implement tax strategies? Now, I can't go over all 5 of them, but I put together how to implement one of the strategies that will save you, or I should say saved our clients on average, $8,850. And we're going to talk about this tax strategy at the end of the video. I will take you step by step. Make sure you have your notepad and your pen, because after this, you're going to be calling your accountant. Let's get started right now. So what is really tax planning, and what's this term that you keep hearing? As a matter of fact, tax planning is being taken very seriously by accounting industry, especially by American Institute of Certified Public Accountants, because it has become a big thing. A lot more business owners are now in America, and a lot more business owners want to save money on taxes. But the accounting industry is changing. It used to be that there was a lot of tax preparers, and there still are a lot of tax preparers. But very, 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 very few select accountants will actually help you save money on taxes. Those are called tax advisors. So tax advisors are the one who use tax planning strategies. Using tax planning strategies or having a tax plan, that means being proactive. A lot of people are used to coming to their accountant after the year is over, ready to file their taxes. They get their tax bill and they say, is there anything else that could be done? There's got to be something else. Oh, my accountant he's a knucklehead. Like, he couldn't say me anything. That's because you maybe were not using tax planning, right? So, and you might be like, Boris, that's some accusation. Look, you're a profitable business owner. You know it hurts to pay taxes. But you know what hurts the most? I can tell this to you as a business owner myself. What hurts the most is that when you know there's something that can be done, but you just don't know how to. You just wish you knew how to. And that is what tax planning is. Tax planning is really an education by your tax advisor exactly what can be done to save money on taxes. It is not tax preparation. Tax preparation is literally just getting numbers from you, tax documents, putting the right numbers in the right boxes. But I'll tell you how much I was surprised that even the right numbers are not put in the right boxes, which results in overpaying in taxes. Now, before we talk about 5 tax planning strategies, I hope you understand what tax planning is. The tax strategies that I'm about to tell you about is something that needs to be done proactively. It is not something, all right, great, I'll wait until the year is over, then I'll go and do some things on my taxes. Nope, that won't work either, okay? So now that we've talked about what is really tax planning, let's talk about the top 5 tax planning strategies that you can use for 2024 right after this break. Hey, Boris Musheyev here. Sorry for the quick interruption. 5 seconds, I promise. I want to make sure you get your free PDF, 7 write-offs every S-Corporation business owner must know. The link to this free PDF is in the description below. That's it. Thank you so much. Continue watching. Okay, awesome. Welcome back. So let's talk about the 5 tax planning strategies. So like I said before, I actually got these numbers, savings. This is the average savings for each one of these strategies for our clients for last year, okay, which total $40,735. Just these 5 tax strategies alone. First of all, entity election. A lot of business owners may already have an S-Corporation, and I applaud you. Great job, especially if it is your main operating business. Now, some entities don't have an S corporation and they have what's called a limited liability company, an LLC, that is not being taxed as an S corporation. If you're not being taxed as an S corporation, you might want to speak to your tax advisor and assess whether S corporation makes sense to you or not. Because within an S corporation, you do not pay payroll taxes, which is the Social Security and Medicare tax on the entire net profit. You only pay it on your salary. Okay, that is an S corporation. When you have a single member LLC, you pay that tax, that extra 15.3% tax on their entire net profit. Now you might say, Boris, I already have an S corporation. Then you might want to focus on your reasonable compensation. IRS says that you as an S corporation business owner must pay yourself a reasonable salary. Not too much, not too little. As a matter of fact, before President Biden was running for office, or while he was running for office, you can actually just Google it. He was paying himself through an S corporation, saving at least $500,000 on payroll taxes. He was using the exact same loophole. And when he was asked, or his tax team was asked, they cited the exact IRS tax code that I'm telling you right now, which is like, hey, as an S corporation owner, you have to pay yourself a reasonable compensation. So his reasonable compensation was assessed, and that is what he was paid. So he set up an S corporation. I'm telling you, I kid you not. This is a legitimate tax strategy that even our president used before when he was running for office. So check it out, because what happens is that business owners that have an S corporation, they tend to overpay themselves in taxes, in salary. That results in overpayment of payroll taxes. What we want to do is we want to lower that to reasonable compensation. Our clients, which we do reasonable compensation analysis every year as part of their tax plan, as part of the tax advisory, we assess that. And average savings per each client, when they're using S corporation combined with a reasonable compensation report, $8,387. Now, $8,387 back in their pocket. Now, it's still not too late in 2024 to take advantage of this tax strategy. Now, we had a situation, a client that actually started paying himself on a salary, but he did not file for an S corporation. And 2023 already passed. We made a late S election for him because he was compliant and he was doing everything as an S corporation. So if you are in that situation, believe me, this can be fixed, but I strongly recommend being proactive about it, because you cannot, after the year is over, go back and reduce your salary. Okay? Or if you are operating as a single member LLC, you can do a late S election, but you didn't have a W-2 salary. All right. Then number 2, top 5 strategy is retirement. So many business owners save a lot of money on taxes by having a proper retirement tax strategy, whether you have employees or you don't have employees. Okay? If you have employees, consider setting up a regular 401k, because you can put away up to $23,000 from your paycheck into your 401k. If you don't have employees, you can do a solo 401k, a SEP IRA. On average, our clients saved $11,230. This is the strategy that you need to be super proactive about, because if you wait till year end, it may be too late, especially if you're using a solo 401k or regular 401k. It has to be processed through your payroll, especially if you have an S corporation. The third strategy is PTET. This is something that you can use for 2024, and by the time I'm releasing this video, it's not too late. Pass-through entity taxation. I like to call it a made-up tax by your state. Most states made up this tax to give you a benefit. You get a credit on your personal taxes, but at the same time, you get it as a business tax deduction. Something that was created to combat Tax Cuts and Jobs Act in 2017. I'm not gonna bore you with details, but if your accountant haven't spoken to you about it, especially if you're in a high-paying tax, such as in New York or California, man, we got a bunch of clients from California saving tens of thousands of dollars. New Yorkers, or most of the states in the country, average savings per client, $7,371. Guess what's the best thing about this strategy? You actually don't have to spend money on anything. You just have to rearrange how you pay your taxes. I'm telling you, it's like, it's a winner, okay? The next thing is tax-free cash withdrawals. Like, what do you mean, Boris? Tax-free cash withdrawals. What happens is that you can actually reimburse from your business for the expenses that you use for the business in your own home. That could be your home office, a separate area in your home where you're conducting business, whether you have a separate location or not. IRS still allows you to reimburse yourself if you use it for administrative purposes. The second tax-free cash reimbursement, if you hold meetings in your home up to 14 days, which is called an Augusta rule. I made a video about it on my YouTube channel, very detailed video, and also talked about how to avoid IRS audits using that tax strategy. This tax strategy is part of 2024. Saved my clients, on average $4,889 on taxes. Now, S-Corp Health Insurance, that's the big one, okay? And that's what we're going to talk about, how to implement it. Saved my clients $8,850 on taxes. Now, if you own an S corporation and you're more than 2% shareholder, IRS actually lets you take a double dip into this deduction. Not only do you get a tax deduction if you properly report on your W-2, but you also reduce your taxable Social Security Medicare. Now, a lot of business owners say, Boris, this is too much information for me. This is too much technical terms. I agree. So that is why you've got to be working with a tax advisor. This is your tax preparer is not doing any of this stuff. They're just too busy preparing tax returns. All right, S-Corp Health Insurance saved our clients an average of $8,850 total savings. Adding up all of these strategies was $40,735 per each business owner. Now we're going to talk about how to implement the health insurance strategy in your business where you can start saving money right away. Right after this break. Hey, thank you so much for watching the video. Very quickly, if you don't mind, I want to ask for your help. I need your help. I want other business owners just like you that will benefit from a video like this to catch this video. The best thing that you can do for me, please either like the video or even say something in the comments, because that really helps the YouTube algorithm when it sees a lot of engagement to push the video to other business owners just like yourself, or better yet, subscribe to the channel would be much appreciated. Thank you again. Now let's get back to the tax strategy. Okay, welcome back. Now let's talk about how to implement at least one of these strategies. Boris, give us the juice, okay? So let's talk about owner health insurance. If you're an S corporation owner, you've got to do this proactively. If you own more than 2% of the S corporation and you pay for health insurance, IRS lets you double dip into this deduction, or what I call double dip, okay? Meaning to say you get a tax deduction, but you also save on payroll taxes. Now, the policy of the health insurance can be either in your name or the business name. It can be paid by you or by the business. If it's paid by you, just have the business reimburse you, okay? That's simple. It's really not that complicated. What gets complicated is how to report it. And honestly, all payroll softwares have this option in their payroll where you log in and you say, hey, I'm an S corporation owner, I own more than 2%, and this is how much I pay for premiums every month. What happens when your payroll is processed, that will automatically be recorded on the W-2 box 14 when you file your taxes. And number two, it will automatically deduct it from your Social Security Medicare taxable wages. It's a small fix without you spending any money. So if you're not working with a tax advisor, I personally do not recommend doing this on your own. Why is that? Number one, let's say a few months in a year already passed and you want to implement this strategy. You can actually go back to the beginning of the year and include this. That's number one. Number two, you need to properly set it up on a monthly basis. I would strongly recommend doing this with a tax advisor. I've had some clients who came to work with us and they watched a bunch of my YouTube videos and they implemented this. It was implemented incorrectly. This video is for educational purposes. Definitely seek a professional advice from your tax advisor. Hopefully you have one, okay, to be able to properly implement this strategy, because this strategy alone saved our clients an average of $8,850 on taxes, simply by switching a couple of things around on their business. Ladies and gentlemen, I just want to tell you right now, if you have a profitable business, you're overpaying in taxes, if not by tens, then by hundreds of thousands of dollars. If you don't have tax planning, if you don't have tax strategies, and you just have a tax preparer who you speak to once a year, that is not the way as a business owner to save money on taxes. That is not the way as a business owner to operate your business. When you buy items, equipment. You always look for deals on sale, right? You sign up for marketing to make money, to advertise your services, and yet you give it all away by not properly having tax strategies and tax planning. So hopefully after this video, you'll be able to implement top 5 tax strategies and get yourself a tax advisor. Till the next time.